This is LCM's full year results for the financial year ending 30 June 2022. This year really marked the turning point in LCM's business from focusing purely on investing our balance sheet capital and moving into an asset management based model. In terms of highlights, LCM fully committed its first fund of $150 million during the financial period, and we moved into starting to commit our next fund where we're targeting $300 million. So very encouraged by the fact that we fully committed our first fund during some pretty disrupted markets consequent upon COVID, and now moving into our second fund. In terms of LCM's profitability, really encouragingly, our profit was up 23% on a consolidated basis as against the year prior. Commitments stayed consistent with the prior year at $104 million, notwithstanding that applications were down marginally. Now, what that tends to demonstrate is we are still able to commit at the same level, notwithstanding that we have fluctuations in the applications. And it also tends to suggest that those applications are coming through as better quality. In terms of the asset management business generally and assets under management across both our asset management business and our balance sheet, the commitments as at 30 June, the end of the financial period, were up at $414 million. And by the time the first 2 months of the current financial year had passed, we had increased those to $452 million, really demonstrating that we're getting increased demand for our capital moving into the current market conditions. In terms of capital invested over the period, it was down to $66 million for the period before. And that is really just a direct reflection of us changing our model from direct investments from balance sheet across to using third-party capital to generate the profits in our asset management business. In terms of measuring LCM's performance in respect of each and every investment that we have completed over the last 11 years, we're providing really strong and consistent metrics. So at the end of that 11-year period, in terms of an internal rate of return, 79% inclusive of losses. In terms of our return on invested capital, up slightly on the 10-year mark at 163%. So what we're seeing there is really consistent returns being generated in respect of the strategies that we employ with respect to investment. And finally, touching on market conditions, we have seen during this financial period the world really come out of the constraints of COVID, and we've come out into pretty unsettled and turbulent markets. We've got high inflation, we've got central banks increasing interest rates to combat high inflation. We're seeing instability in global markets. We're seeing the risk of recession here in the United Kingdom. We've got geopolitical risk. Now, all of those factors create uncertainty in the market, and where one has uncertainty, we tend to see an increase in the demand for using a third-party source of capital to pursue your disputes. So that is really capitalising upon the counter-cyclical nature of our asset class. Just moving to the financial highlights of the period just past, in a market which was still marked by considerable disruption, both economically and the back end of COVID, LCM performed really strongly. Really encouragingly, our gross revenue was up 30% on the prior year to 47.2 million Australian dollars. Our gross profit up 18% on the prior year to 30.9 million Australian dollars. Our adjusted profit before tax, really encouragingly, the profit was up 27% on an LCM-only basis to 20 million Australian dollars. Statutory profit before tax down 1%. Cash at the end of the period down slightly, but bearing in mind that really is converting cash on our balance sheet straight into our direct investments. Investments at cost at the end of the period was up 14% on the prior year, so we're putting more of our capital to work. And total invested capital during the period was down, but again, that is directly reflective of us transitioning from a focus on investing balance sheet capital directly to a funds management or asset management model. So overall, a really strong financial performance in a market which was marred with disruption. In terms of LCM's underlying business, investors know that we pursue two business models. And LCM is really at a point of transition here between using its capital from balance sheet in direct investments to an asset management model. Now, there's always going to be a crossover there because the strategy that we have employed here is co-funding. So what we see generally across all of the metrics that you're seeing from balance sheet right through to commitments is LCM transitioning from a business where they were committing to 100% of the investment from our own balance sheet capital across into utilising third-party funds and LCM using its balance sheet capital through co-investment. Now, what we're seeing in respect of that is the asset management side of this business growing really strongly. So we've gone from commencing that business model in March 2020 to fully committing our first $150 million US fund during this current financial period, and us moving into our second fund targeting $300 million. Now, we have over 2/3 of that committed through investment capital from third parties, and we have some really strong interest in the balance of that. But as I say, we are committing into that second fund already. And within a period of about 2.5 years, LCM will have generated a asset management business with just under $500 million US worth of funds under management. So we're really pleased with the progress of the asset management business and the progress of our transition across into running that business model. In terms of the building of the scale of LCM's business, I'd encourage investors to look at sort of three broad categories of metrics. And the first one, really importantly, is how many commitments were we able to achieve as a business during the financial period just past. So in this case, as at the financial year end, we had committed 104 million Australian dollars during that period, which was really consistent with the year prior. The next thing that I'd encourage investors to look at is, are we able to maintain the performance of the underlying investments? And at the 11-year mark, in terms of measuring every single completed investment that LCM has completed, the internal rate of return has been consistent at 79% and a marginal increase in respect of return on invested capital to 163%. So that really demonstrates the vigour and the skill that LCM possesses in terms of determining which of these dispute investments we should commit to and which ones we shouldn't. And then finally, I'd encourage investors to look at assets under management and ensure that there is an increase year on year of assets under management. So at the end of the financial period, LCM's total assets under management was sitting at 414 million Australian dollars. But really encouragingly, during the first 2 months of the current financial period, we managed to increase that already to 452 million Australian dollars. In terms of outlook, LCM has a large portfolio of mature direct investments from its balance sheet, which we will enjoy the full economic upside of as we transition across into a co-funding arrangement with our asset management business. The maturing of those investments and the liquidity events which will occur will add significant organic capital to our balance sheet. In terms of our asset management business, we're growing that rapidly in line with commitments, and we expect in the near future to have just under $500 million US under management. That increased access to capital will allow us to grow a much larger and more diversified portfolio of dispute investments. And in terms of market conditions, the expectation across our industry generally is that there would be a significant increase in demand during the disruption caused by COVID. What we've actually seen is that demand is really now starting to take up in the market. And you can see that in terms of the first 2 months of the current financial period. So we are expecting that there's going to be a significant increase in terms of the demand for LCM's capital. Litigation finance has always been considered a counter-cyclical strategy in terms of investment, and I think we are really going to see the benefits of that counter-cyclical nature coming into the market condition. And just touching finally upon LCM's experience and our deep referral lines, we really will be able to take advantage of the increased pool of capital that we have available in the market conditions to really sort of build the scale of this business.